The following was recorded in front of a live studio audience at the Studio 21 Podcast Café. This is the United Podcast Network.
Welcome to the Stock Market Authority podcast. I'm Bakes, Kevin Baker. I'm going to teach you how to make money in up and down markets. Very few podcasters or coaches cover this. I'll show you how to lock in profits and minimize losses to make you a better investor. So once a week, you're going to know what's going on in the world and the stock market. Welcome to the Stock Market Authority podcast. Good morning. This is Bakes, Kevin Baker, the Stock Market Authority, and my guitar work always makes me smile, and it makes Chrissy smile, my producer. Hey, good morning. Great to see you, and it's good to be alive in America, folks. It is not good to be Sam Bankman-Fried or SBF from here in the Bahamas. Today we're going to talk about crypto, FTX, SBF, and never losing a lot of money in the market, stock market or otherwise. We're going to open up the mailbag, which is great. We're going to talk about your crypto, what you should do with it, Fintechs, and a couple of personal finance questions, and then we're going to go to the portfolio, my real live portfolio that my wife and I have outside of just going away with the S&P 500 in the retirement plans. And we're going to go through last week's changes and future opportunities that arise. And I'm going to hopefully finish with a flourish with some much-needed levity with Gary Gulman, one of my personal favorites. Before I forget, please go to my website, stockmarketauthority.com. The link is in the show notes. Please sign up for my free newsletter. I'm charmingly laconic, so I am going to be very brief there like I am everywhere and give you money-making ideas and insights, I hope, every single day. Subscribe to my YouTube channel, please. I'd love to get to 1,000 plus. I really appreciate your help in advance for that. Please go to wherever you podcast, Spotify, Apple, etc. I'd love if you would rate and review. It takes just a few seconds, and it really helps us climb up the rankings. And please follow us on your favorite social media, where I break in with all kinds of things and hopefully share things that help you make money in up and down markets. Full disclosure, and you're smart people. This is not financial advice. I don't know the ins and outs of your personal financial situation. And so what I show is exactly what I share with my boys, Bobby and Jack, like I did in college. We talk about investment ideas. Their friends would come in, and now it's grown to this point with this wonderful, polished Chrissy making me look better than I really am.
I do my best.
God bless you. She's Australian.
G'day, everybody.
Today's topic, Sam Bankman-Fried, SBF. And Chrissy just said, who's SBF? I think everybody knows this stuff, and it's understandable that if you're outside of the investing world or the crypto world, you don't know about SBF. But here's a New York Times headline, How Sam Bankman-Fried's Crypto Empire Collapsed in a Week. You have to work really, really hard to do this. You had some very, very smart people that thought Sam Bankman-Fried was, and frankly, from the outside, it looked like this. I thought he was the J.P. Morgan or the Warren Buffett, or he was lucky or he was good, where he had amassed these billions of dollars inside of FTX, a crypto exchange based in the Bahamas. He had all these VCs, and every time another crypto, Bitcoin, Ethereum, etc., anybody that was involved in that world got into financial trouble, he seemed to show up and say, hey, I'll buy this for cents on the dollar, put it inside FTX, and we'll go forward. And I said, okay, he's going to consolidate the industry, have economies of scale, and he'll be one of the 1, 2, 3 really big survivors. And this is going to be fascinating. So my focus has always been on stocks and ETFs because I can understand revenues and margins and cash flows and earnings. But the crypto world obviously has come up because of what's transpired over the last few years. So to catch you up briefly, you can see this it's all over the journal. FTX's digital coin was at heart of fiasco, hence the title of the show. Collapse puts FTX in legal crosshairs. What apparently he did was there's two entities. There's 130 inside this labyrinth. Like that, I took the SATs the other day, labyrinth. The there's FTX and there's Alameda, his hedge fund. And apparently Alameda was not as good an investor as the headlines would have suggested, was investing in coins and projects and exchanges that were not going well. We don't know all the ins and outs yet, but it's going to come out. By the way, it's going to be a Michael Lewis book and movie that is going to be killer. So he wrote The Big Short, and this is the big crypto short, and so history repeats again. Anyway, I digress. They ran into trouble at Alameda. He took apparently $10 billion of customer funds and transfer them to Alameda to cover those losses, and I guess thought he could trade his way out of it with his girlfriend who runs Alameda. That is just a huge red flag. He is in a world of legal trouble, and the word fraud is being tossed around a great deal, and this is going to be the likes of Enron and Bernie Madoff, and it's really sad for a lot of people, and I hope none of you, and I hope I've helped you get there. We'll talk about that a little bit, but so here's what's going to happen now. The whoever has to untangle this mess is going to go through their 130 plus entities inside of FTX and all of the leverage they've put on in the system, and then they're based in the Bahamas, so then you have all kinds of legal complications about what is where and who is jurisdiction, and then they have their main assets are going to be these illiquid crypto coins worth God knows what, and who's going to be the buyer if you have to sell. And so I think contagion is highly likely. We're seeing that today. ETH is getting crushed. It was 11% when I pulled up here to the studio, which is a beautiful studio, by the way, Studio 21 here in Salem. So what does this mean for you? Okay, this is all great, but I want to, how does this impact you? I want to go back to what I said in June 21st, and please click on the link, because I hold my feet to the fire. Here's time-stamped. I said the sell discipline works. I'm out of Bitcoin, GBTC, the Grayscale Bitcoin Trust, for now. And the for now meant, okay, I think this is going to be, I follow the discipline, I'm out. I'm telling you to be out if you're in crypto or certainly in Bitcoin, and we'll revisit this. Well, that was at $31. GBTC, the Grayscale Bitcoin Trust, is down to under $9, and that's down 70%. And so I know I harp on selling all the time for this very reason. Coming back from 70% losses is really, really tough, obviously, and I don't want you to do it. So please go back and look at what I said, and I posted this the other day on Twitter and elsewhere. I'm pretty good at this stuff, and I want you to at least do your own due diligence. If I say, hey, this really looks ugly, I want you to really consider this. Here's the Grayscale Bitcoin chart. It's a falling knife. And if you haven't heard that expression, it's a falling knife happens in the stock market a lot, in ETFs. I like my thumbs, and so I don't want them cut off, and so I'm not going to try and catch this. I think this is going to be a big, big problem, and it just tells me that I don't want to be anywhere near this, especially given the dynamics that I just mentioned. I also want to point you to my April 21st point, where I said Dogecoin likely will crash below a dime in 6 months. Here's why. Pretty subtle, right? I mean, pretty vague. Anyway, it took a year, but we went from a 64-cent peak to under 9 cents, down 85%. And please go to the link and click on that. It's under 2 minutes. And, I've done this, so it's not bragging. These are the calls that I really try to make for you. And I recall vividly guys unsolicited in bars, showing me their Robinhood account and how much they made on Dogecoin. And the why I said it was going to go down under a dime is that it was a parabola. It went up just like this, and so there's no support as you to catch it as you come back down. Parabola is correct to 80%. Plus, that's the history. That's all the chart reading that I've done, and so here we are. So I've had a couple things to say about crypto, and they've been prescient. And I hope I can be helpful down the road. I've got a take from a viewer's question that I want to address, an audience question, but I'm going to go to the mailbag. But please go to the the stockmarketauthority.com, dating myself. Sign up for my free newsletter. Please subscribe to my YouTube channel. I really like to get to 1,000 plus. We're very dude-centric. I'd like to have some ladies join us. That would be awesome. Please go to the podcast, wherever you podcast, Spotify, Apple, etc. Please follow on social media. And again, this is not financial advice. I'm just showing what I'm doing. So here's the mailbag.
There's a letter in your mailbox.
You got mail.
That is
what
fabulous.
you had in mind?
That is exactly what I had in mind. Something subtle,
Yeah.
very subtle. So that's Chrissy's surprise for me, which is great. This is the mailbag, and it's unbelievable how things dovetail together. Fred from California wrote in, "Hey Bakes, what do I do with my crypto?" And my blunt response then and now is sell to the sleeping point. If you're up and you're thinking about this and you're wondering what to do, sell to the point you can get some peace. I hope it's not a significant amount of money, but it doesn't really. Sorry, it does matter. It matters to you, so it matters to me. But hope isn't a strategy, and the market doesn't care what you paid for it, what you thought was gonna happen here. It's now a loss. So at least make it a tax loss. It's November. Take your medicine. Sell it down to maybe zero if you want to have it as a small speculation because you think something's going on down the road. All right, but the crypto winter just got much colder. It's going to last much longer, and frankly, you'll feel emancipated if you could take that off your screen and just not look at that anymore. So that's my tough, hard crypto thoughts right there. But you can't change the history. And again, the FTX SBF fiasco is going to go on for years and years and years, and we're just starting to see that tip of the iceberg. Basel came in again, and given all this FTX stuff, Bakes, what do you think about fintech? SoFi we talked about last week. Coinbase, COIN is the symbol. Robinhood, HOOD, makes a significant amount of its profits from trading cryptos. And I don't think this is fatal for any of those companies, but it's not good. And I always say, what's the upside? What's going to be the positive surprise that happens? And if the answer is crickets, nothing, then I say, who cares? Let them try and limp along in their business. I listened to Brian Armstrong, the Coinbase CEO. He was on the All In podcast. Thoughtful guy, took great pains to show, say that we're public, we're audited, we have lines of credit, we have, bank diversification, customer funds are not commingled, et cetera, et cetera, et cetera. And those are all things that mean it's not that bad and that they likely won't go out of business, and they're not FTX, but it's not good. Because anybody who thought about, I'm going to make a lot of money in crypto, let me set up my Coinbase account, said, no thanks, I'll take a pass, I'll see you next year at least. So that's just the way the world works. And it's a lesser part of the business for Robinhood and SoFi, Square to a lesser extent, but that part of the business is going to stink for a long, long time. So I'm out of fintech for the time being. I look every single month, as you know, but I didn't see anything last month that said, oh boy, these are bottom and are starting to rise from the ashes, and I got to go buy them. So I would stay the heck away. And believe me, I'm going to come in one of these days and say, you got to buy something with both hands. It isn't this, and it isn't now. Here's the Coinbase chart. This is another falling knife that I want you to avoid, and I sure am. And this just gives you perspective. IPO, highly touted, crypto's ripping, the Fed's easy, and runs to 340 at the zenith. A crazy number, frankly. Now it's at 53, less today, as I looked as I was driving in, and the company's losing money. And so in this market, with crypto doing what it's doing, with the lack of other lines of business to buttress this, I just think they're going to be on the ropes for a while. And I say no thanks, at least for Coinbase. And if you want to talk about something else, have at it. I love doing this. But and then Murph came to me, one of Jack's friends out of New York, one of my favorites, and said, Bakes, what percentage should I invest? Not in crypto, just overall. And again, I don't know the details of your personal situation. This isn't financial advice. But having said that, I think something that should be obvious is keeping money away from taxes is just very logical. So, you know your budget, you know what's left over, but whatever you can take off comfortably, especially if you can max out the deduction and max out the company contribution, put as much as you can into a retirement vehicle, 401k, IRA, whatever your case is, and just automatically, especially in your 20s, buy the S&P index fund that's in there that costs next to nothing, and that will compound at 8-9%. It's going to go down 30% of the time. We're all big boys and girls here, but have that compound, into your 30s, 40s, 50s, 60s. You end up with a lot of money, and then you pay the tax as you take it out down the road. So, and I just think that's blocking and tackling kind of things. Now, shameless plug, if you have money left over, I think you ought to be doing the kinds of things that we're doing, looking for situations that the pros can't touch, won't touch, and make money in a down market. And I just think it's psychologically beneficial to be playing offense on the balls of your feet, having your money work for you as hard as it can. And frankly, I enjoy it. I love the intellectual challenge. I like going against the grain. I like crushing the pros. We covered that last week. And so, Murph, I hope I answered that. If I didn't, please come back to me, and I'll cover any topics in more depth. Dave from New Hampshire wrote in and said, hey, is the stock market going to crash? And I go, my knee-jerk reaction is I doubt it. Because there's enough fear and consternation out there. I don't see a black swan event blindsiding us wildly at this point in time. And just for context, I was there for the '87 crash. I was there for the tech bubble in 2000. 9/11. I was in New York. I was in Midtown. I wasn't down there by the towers. 07, 08, and I saw the COVID 2020. So I've got the scars to prove it. And I don't see anything out there, and I don't see the charts suggesting a big collapse. I'm always looking at the charts, as you know. I don't see it out there right now. Two things to consider, and we talked about this last year when very few people were. It was on page 42 of The Economist, and they were talking about the increasing tensions in Taiwan. That's real. And I don't think that's priced in. If something really militarily happens with China trying to retake Taiwan and us arming them and defending them, all these nice meetings that they had over the weekend are going to be for naught, and that's going to be a real problem. Taiwan Semiconductor is a huge contributor to the chip ecosystem, the technology ecosystem, and they're based in Taiwan, obviously. So if something happens bad to them, it's going to be bad for a lot of companies and technology overall. And then something I hate to think about this, but Russia is being exposed as much less than a superpower, certainly not a military, conventional superpower. Do they want to be a nuclear superpower and get desperate and explode nukes? We had this news item about a missile in Poland, which didn't really make any sense. That's playing itself out. But so there are black swans out there. I don't think a crash is likely. And if you're using our sell discipline that we talk about so much, I don't think you're going to be harmed too much if anything like that happens. So I hope that's helpful. So, and please, keep those coming in. I really love this stuff, and I've got opinions, believe me, and I hope they add value. All right, I want to segue to the portfolio, and this gets a lot of positive response as well, and I hope you agree, because I don't see a lot of other podcasters doing this. I just show what I invest in with my wife and I, and using my crazy reading of thousands of charts every month. And so here's the portfolio. And the first thing I do when I spend about 3 minutes a day on this, I really do. I look for red and I look for down 15%. And if it's down 15%, I shoot it like Old Yeller. And I don't have any of those, and I rarely have any of those because, and I know this discipline is tough to adopt. It took years for me to do it, but when you don't have anything bigger than down 15%, you can make it up in other winners. And so I want you to hold your winners, let them run, and cut your losers. So you see, I've got 3 really, really small losses down here, and pretty proud of that. And obviously a lot of winners here that by and large are mostly long-term capital gains, so the tax bill is not going to be that bad. Last week, I want to talk about 2. I don't want to go through all these line by line, but please follow me on social media so you see when I say, hey, something's changed here. I locked in a 59% profit in the SARK ETF, SARK. That's the next chart. Locked in a 59% profit. I still own 2/3, but when it breaks the 200-day moving average, again, it's automatic pilot. I don't think about it. I'm very dispassionate. I sell 1/3. I think I'm right. I think the market's wrong, but that's like spitting on the umpire. I don't do it. I'm out for 1/3, and then I'll let the 2/3 run. And I hope it hits new highs. If it doesn't, it hurts a little bit less. And if it does, so be it. I'm still making money. And this is the ARK fund, which is they own the Teslas, the coins, the Robin Hoods of the world, Zoom and Roku and things like that. I still think, as much as they've gone down, they look expensive to me. The charts look ugly, especially Tesla, and they're coming down. So stay tuned. We'll see what happens. But taking 59% profits, I'll do that all day. I'll take it all day. Next, and I'm going to put this out later today, I sold 1/3 of the EFZ ETF. This is short the Nestle's and the AstraZenecas of the world, the old line European stocks. And for right now, I'm wrong. I was down 10%. I'm selling 1/3. And I think these things are eventually going to decline. And so this ETF that benefits when those stock prices decline, it's going to go up. I think that's the case. I think I'm right, but the market is telling me otherwise. That brings my cash up to 33%, and the pros would never do this. I talked about this on the last show. You don't have the constraints, the handcuffs that the pros do. And so having 1/3 of the portfolio in cash, I can change that in an afternoon. I'm always looking for new opportunities, but the market is telling me that you have to be a little bit more nimble and be looking for a change in sentiment. So I'm short 56%. The ARK stocks that we talked about, the SPACs, all the EVs that are in there, and the lower quality SPACs that came out over the last year. I'm short emerging markets, mainly China, by the way. The Qs, which is Apple, Tesla, Microsoft, etc. The small caps, the Russell 2000, real estate, financials, and the big European stocks. So I'm literally about as diversified and global as I can possibly be by, in essence, being short, 6 or 7 ETFs. I own the agriculture, literally the bushels of wheat and corn and soybean through the tags ETF. And I'm still long energy, which is acting better than the underlying commodity, and I'm a little bit leery of that, but I do want to have some exposure to energy, and I'm 1/3 in cash. I go through thousands of charts, at least monthly, usually more often, and there's nothing new to buy yet. Believe me, I'll come out when I have something, but I'll break in with new investment ideas. But right now, I like where I am. We're still up for the year, and I think that's pretty darn good. Having said all that, J.C. Peretz at All Star Charts, I really respect. I like him. He's been very forceful about his cyclical and seasonality work. And we just had the election. You know what I think about politics and stocks. Stocks drive elections, not the other way around. By the way, the market was up since Biden took office, and so that might explain a lot of the reason why you didn't have a red wave. And I know they're going to say people hate Trump, et cetera, et cetera. I contend that the stock market wasn't down enough to really damage him, even though his approval rating is pretty poor. That kind of saved him. If you see the next 2 years stocks really going down, then he becomes Carter. And I doubt, frankly, he runs again. But so here we are now. It's now November. The election's behind us, and you see what happens in this blue line. If past is prologue, we'll start having good years for the next two. It could happen. The question I have is a few things. The Fed is raising rates, not lowering rates, although inflation is slowing. So that's a caveat I have. EPS estimates are coming down. I think we're probably already in a recession. And so we'll see how much this plays out. And then my real tiebreaker is I go through all those charts and I don't see big parts of the growth markets that I want to buy. And when I do, I'll change my tune. So right now, I like where I am, but I just want you to be thinking of the positive developments that could occur if this cycle plays out this year. I talk a lot about heavy stuff, and I don't, some of this is serious, and I don't want to be overly serious. So I always finish off with some much-needed levity. That's we got to come up with a segment, some more goofiness for that. Gary Gulman's one of my favorites. We saw him live when I went to the Comedy Cellar in New York, which I really recommend. It's a fabulous place. And this is Gary Gulman on Anti-Semitism. I wish I could play a clip for you, but then the copyright lawyers come out of the woodwork. So go to the show notes, click on this. It's 6 minutes. It's on Anti-Semitism. It's absurd and funny, and it'll really make you smile. So I hope that finishes up nicely. All right, that's the show. Please go to my website, stockmarketauthority.com. Sign up for my free newsletter. Please subscribe to my YouTube channel and my podcast so that when you're driving or walking the dog or working out, you can hear this wonderful baritone tell you about what's going on in money and markets. Please follow on your favorite social media. Please email me, Bakes at stockmarketauthority.com. Twitter at BakesTakes _ I respond to everything. Good, bad, ugly. I respond to it. Thank you very much. See you next week. Keep smiling. I'm Bakes.
The views and opinions expressed by the hosts, guests, or callers of this program do not necessarily reflect the opinions of the Studio 21 Podcast Café, the United Podcast Network, its partners, or affiliates.